How's things, guys? Good morning, good afternoon, Marianne. We'll give it till about 3 minutes past just to give everyone a chance to get in, and then we'll kick things off. I'm not going to go through, I'm going to just basically go through the purpose of the journal, like why it's designed the way it is, and then I filled my own in last week just because I didn't really trust anyway. I didn't really trust you to submit yours, so I'll go through mine. It was a pretty interesting week, so there is some hopefully good information in it.
Hey David, hey guys.
That's my size things.
How are you doing?
Kieran, Brian, how are you? Orlando, how are you keeping? Better than amazing. That's good to hear. I love positivity in the afternoons. Right, so we'll kick off now. I've put together a bit of just a presentation, just sort of going through the journal, why the journal is designed the way it is, sort of what it's designed to help you sort of achieve whenever you fill it out consistently. And then I will go through my own journal from last week where I sort of show you how I fill it in, what sort of things I take note of, that sort of thing. And then how you can hopefully build your sort of mindset data over the long term, just as you do with your sort of technical trading data. So let me share my screen here. Can everyone see the presentation?
Yes.
Right, so the agenda, the main purpose is basically to go through the trading mindset journal. I'll briefly go through sort of the key points from the first mindset workshop, but if you haven't seen it already, I would recommend you go and watch it. It's on the website. It's sort of go far more in depth into the topics in it. So but hopefully we'll sort of summarize it quite well. Then sort of we'll go through the layout of the journal, why it's designed the way it is, and what it's supposed to achieve, and how it will hopefully improve your trading performance if you do it consistently over time. And then we'll go through my completed journal from last week to illustrate, you know, how I fill mine in and how you can do it. And as always, if you have any questions, you want to share your own experiences or anything like that there, feel free to unmute yourself or stick it in the chat box and I will get it answered. So just to briefly recap the first workshop. The main topics covered were the importance of developing a trader's mindset alongside the technical skill. You know, you can go into, you know, there's a good debate about, you know, which one is more important. Personally, I think it's probably 80-20 mindset over technicals, because I think strategies change. Like, you're going to be, you know, you'll probably be trading a different strategy in 5 years' time, whereas, you know, the mindset's a constant. You know, you might completely leave like supply and demand S&C behind you and move on to something else, but you're always going to need the mindset to execute it. Then it was sort of the role of the self-image in your subconscious performance, basically that how you see yourself basically becomes the generates your thoughts and emotions, and then that ultimately generates the outcome. And then the two main ways in which sort of the two main negative emotions that manifest in your trading, greed and fear. Whether that's, greed leads you to over trading, chasing the market, taking a lot of losses, can end up in bad drawdown if you have one of those outer body experiences where you just completely lose the plot. Then obviously the various ways in which fear can present, as fear of missing out's the obvious one, which sort of ties in with greed as well, or fear of being wrong, fear of losing, and fear of the unknown. If you're relatively new in your journey and you don't know, you haven't proven to yourself yet that you can consistently extract profit from the market, that's a fear as well. And sort of the key point towards the end of it was that the first step to overcoming these issues is building awareness around them. It's like when you're starting out, it's quite likely that you're completely oblivious to the way these things manifest, which is why it's easy to sort of sit there and you're constantly looking to refine the technical edge. You're constantly looking for, the little tweak, whether it's, the new liquidation, whatever, the new entry model, whatever, that's going to make you consistent, when in reality it's probably your mindset that's preventing you from executing your plan consistently. So yeah, becoming aware of how the issues manifest in your trading and the limiting beliefs that underpin them, because at the end of the day, we are our beliefs. It's like, that's how we see the world. We might think we're relatively unbiased, but every single one of us views the world in a different way because of the beliefs that we've had instilled within us, whether that's through social programming, when we were growing up, from our parents, teachers, whoever. And then obviously identifying where these limiting beliefs emanate from. If you've a belief that you're maybe not worthy of success, maybe you can trace that back to maybe a teacher at school telling you that you weren't good enough to achieve your goals. And then, you might have brushed it off, but it might be lingering in your subconscious mind, and then that's sort of messing with your ability to execute. And, you might think it's not there, but it is. But then sort of when you start to look at your limiting beliefs and actually sit with them and figure out where they come from, then you can sort of figure out, it's like, right, does this belief that I have about myself, does it serve me and my trading goals? And obviously in most cases they won't. And then once you sort of realize where it comes from and understand how it affects your trading, then you can replace it with an empowering belief. So say if it's if it was a teacher telling you that you weren't good enough for whatever, it's like you can replace it with something that you achieved, sometime, something, say your teacher said you weren't good enough to achieve on it, then you went to university and got your degree. You can say, oh, well, he said I wasn't good enough, but I went and did this, and that proves to me that I am. So yeah, basically it's all around awareness, around emotions, trader's mindset, and that's where the trading mindset journal comes into the equation, because fundamentally it is basically designed to help you build awareness. That was the main idea behind it. So it was, rather than just sort of purely build awareness, I designed it to be slightly multifaceted so that you can reap the most benefits possible from the journaling process. If you're going to sit down, you're going to spend your 5-10 minutes a day doing this, like, you might as well get as much bang for your buck as possible out of that. So it was split into 3 sections: pre-market, intra-market, and post-market. And then just the most important thing to note with the journal is, like, I know myself over the years, I had a pretty love-hate relationship with journaling, where I would sort of start and then I'd maybe do it for a couple of days and then quit. The most important thing is the aim for consistency and not perfection. It's like, I would sort of miss a day, or maybe would half-ass it one day where I basically wasn't fully focused on it and didn't give it my full attention. Then I'd sort of just lose interest in it and say, oh, it's not worth it. But if you miss a day, who cares? Just start the next day. Don't worry about filling in the previous day. It's like, at the end of the day, after doing this for a month or 2 months or 3 months, you just want to have the data there so that you can go back and compare it maybe to your results. If you had a good week, if you banked a lot of profit in a week, then you can go back and look at your mindset journal from that week and sort of see what was going on. How are you feeling pre-market? What were you doing differently, maybe, that you weren't doing when you had bad weeks, etc. So yeah, ultimately perfect is the enemy of good. But yeah, the 3 sections, obviously pre-market, just to go through this here, these are the questions basically in the journal. How am I feeling coming into the session? Any noteworthy events recently that may affect my mindset, either positively or negatively? Again, noteworthy events, it could be trading, could be general life. If you've stuff going on in your personal life, maybe you're not fully focused on trading, or maybe it could be trading related, where if you say missed a couple of trades or you took a few losses, that can negatively affect it. And then what is on my mind about yesterday and the day ahead, just doesn't have to be too deep. Just generally, what are you thinking about? You know, are you thinking about the loss you took yesterday? Are you feeling good because you banked a winner yesterday? You know, just noting these things down. What strengths, qualities do I want to manifest in my trading today? Which again, this is sort of priming yourself for optimal performance, you know, rather than just sort of building awareness. It's like you want to prime yourself as well, because if you're sitting down to do this, you might as well sort of get yourself in the zone. So what strengths or qualities do I want to manifest in my trading today, and what potential traps do I want to avoid? Which again, you know, maybe you're saying, oh well, I missed a winner yesterday. I'm annoyed that I didn't bank the 10R, so I need to be wary of greed seeping into my trading and sort of forcing subpar positions to try and get involved. So yeah, basically, just let me back. There we are. Designed to prime you for the trading day ahead by reminding you of what qualities you want to bring to your trading, help you identify any significant events that may negatively affect your trading performance, making you aware of any potential traps that you want to avoid, force you to reflect on recent events and build awareness about how these may negatively affect your trading, or positively, you know, might positively affect your trading. And ultimately, doing this pre-market, it should help you focus on bringing the best version of yourself to the market, because you've identified, you know, who you want to be in the markets. You know, you want to be centered, you want to be focused, you want to be focused on the plan. And hopefully that should improve your performance, because, you know, it's very easy just to rock up to the computer in the morning and sort of half-ass your analysis, and you're there and you've done your markups or you've done your pre-market analysis, but you're not 100% focused. And it's like, it's very easy to do that. And because you're doing the work and you're at the screen, it's easy to feel as though you are doing what needs to be done, but ultimately maybe you're not. And hopefully this here should help. Should help with you sort of being more present with the markets, more focused coming into it. So then those intra-market, designed to capture your thoughts during the market. And this is very important because basically it was designed, you know, what are your thoughts if you're passing on a trade? So say you have a potential setup that you're considering executing. It's like, right, you know, it fits your plan, it's valid, but it's like you decide to pass on it, and you need to note down why. Because say you pass on that trade and then you see Matt's markup, Matt took it, and then you're like, oh, why did I pass on that? When you're looking at it after the fact, and when you know Matt took it, it's easy to go back and look at it and say, you can only see the positives. You can only see, oh yeah, it's this. But then to have that little bit of information, is like, this is why I passed in this trade. Then that can sort of help you identify the hole in your technical game, where it's like, oh, well, yeah, I passed because the liquidation wasn't strong enough, but there was a liquidation there, so I should have taken it. And it's like, that's how you can identify the sort of little holes in your technical game as well. And similarly, the thoughts when executing a position, you know, why are you taking the trade? Just quickly jot down, you know, how are you feeling? You know, what do you see? What is causing you to execute the trade? Because again, if you take a trade, you think it's a good trade, you see in the markup, Matt didn't take it because it wasn't that great a trade. And then you're thinking, you go back and look at it and it's like, all you can see is the negatives. Whereas like having that actual information from the time is invaluable. And then sort of having your general thoughts about the market conditions as well, and how these can influence your actions. For example, like if you're looking at the markets and it's like, say M15 swinging internals aligned, you're in the early stages of 4-hour pullback. It's like, so it's like, it's all systems go. It's like you massively want to get involved. It's like, again, that's whenever you can sort of recognize sort of FOMO and greed seeping in as well. Whereas, you know, if the markets are completely range bound and you're not really expecting any trade, similarly, that can sort of lure you into the false sense of security where you miss a potential setup because you're not fully focused. Having the in the moment data is invaluable for journaling purposes, and it should take your journaling to the next level, as it helps you identify the thought process at the point of execution, and it prevents confirmation bias basically when you're journaling the trade after the fact, which is obviously, confirmation bias is just simply, you know, if the trade played out, it's, you know, you only see the positives. If the trade didn't play out, you only see the negatives. Whereas obviously, you know, good trades don't play out, bad trades do play out. So it's important to sort of be able to differentiate between the two. And this is the intra-market section. Then, if executing a trade, how do I feel at the point of execution? Am I relaxed? Any negative emotions? Again, I mentioned in the first webinar that whenever I'm sort of have a tendency to force things, I can basically feel a tightness in my chest. And that, to me, having sort of established that through my journal, and that is sort of my signal to just get up and walk away from the desk for 5 minutes, go and do something else, because that's whenever you're liable to do something stupid. And at the end of the day, you can't do any damage if you're not at the screen. So just go and do something else. And then obviously just quickly list down the positive and negative confidences that are leading you to execute the position. And then if passing on a potential entry is just basically the opposite, how do you feel? You know, are you a bit, you know, if you've taken a few losses, like, are you a bit anxious? You know, you're worried about taking another loss. You know, do you have a bit of tightness in your body? You know, that sort of thing. And then what are the positive and negative confidences again, just quickly jot them down. And then, yeah, the general market conditions, and just, you know, do they elicit fear or greed? You know, as I say, if everything's aligned, you know, and you're very eager to get involved, it's easy to FOMO and greed and sort of chase the market and take subpar positions. But whenever I'm sort of going through my journal, I'll sort of give you an example where I had a slight bit of FOMO last week, but actually, in the context of how the market was sitting, I actually don't think it was a bad thing, because I had the sort of FOMO because everything was aligned, but it meant that I was at the desk and focused. It's like, but then obviously I'm sort of a bit more experienced. So in my case, it was a positive. Whereas if you're less experienced, then it can be a negative, and that it just leads you to force in subpar trades. Whereas personally for me, I noticed that, yes, it was FOMO, but it was I was very alert, focused in the zone. So in that instance, it wasn't exactly a negative. And then post market, very simply, just force you to evaluate your trading performance for the day. What did you do well? What did you not do so well? What can you improve going forward? Obviously, it's beneficial for both instigating behavioral change and reinforcing positives, because it's like there's questions at the end of it. I'll go through it here. Out of 10, how would I rate my trading performance today? What did I do well today? Something I could have done better today. You know, something I could have done better today. It's like, it's very, with that question there is a tendency to, you also have to try and find a negative. Whereas, you know, there's days where you traded well, you did everything you could have done. So it's perfectly fine to say, happy with how I traded today, definitely making progress, you know, basically just a positive reinforcement. Because look, at the end of the day, positive reinforcement's every bit as important, as possibly more important when it comes to when you factor in self-image, than sort of pointing out the negatives constantly. Something I learned today about myself for the markets, and an action I can take to improve my trading going forward is, and again, there might be days you just leave that blank because maybe you traded well, or maybe there's a little something you noticed in your morning routine, something you did differently today, something you did differently the day before, that sort of left you in a better place. And yeah, so that's those sort of questions. That's the post-market review. Then ultimately the outcome, which is what we're all interested in. Yes, we're process orientated, but ultimately the outcome does matter. Over time, you should be able to notice trends in your performance. It's like, you know, for example, if you know, any noteworthy, when you're asked pre-market any noteworthy events, you can say, oh, I had a bad night's sleep last night. Then you might notice that you traded badly, you took a couple of losses, and it's like, right, you have two options. You either make sure you don't make an effort to go to bed earlier so that you're fresher when you get up in the morning, or just make the decision that if you have a bad night's sleep, you're not going to trade, because you might notice over time that the results aren't good after a bad night's sleep. You know, if you miss a trade, does greed induce you into the market afterwards? You know, if you miss the good trade, it's like, do you then take the crappy M1 continuation further up because it doesn't really fit your plan? You can justify it, but you don't want to miss out in the market, which you don't want to miss out in the move. And then, you know, if you take a few losses, does fear prevent you from confidently executing your edge? You know, if you took a few losses, are you much more focused, you know, when you're filling in your intra-market journal and it's like you're passing in a position? Are you much more focused on the negatives rather than the positives in that scenario? And it's ultimately comes back to, you know, process over perfection. You know, you build the data over time, and it's like, you don't need perfectly filled in journal every day. Just build it over time, and then having that data, it's no different. You know, it's every bit as valuable as the technical data. You know, if you know data you have about your strike rate, you know, your average or all that stuff. You know, this stuff is every bit as valuable, especially if you want to take it to the next level. Like, and then you can make the appropriate tweaks. You know, that's in your routine. It's like something I've noticed recently is, it's like I started rewatching Power sort of before I went to bed, just because I've seen it before, but usually when I go to bed, I don't like to watch something that I haven't seen before because sort of might fall asleep in the middle of it or something. But I noticed the sort of the violence that I would sort of wake up in the middle of the night, sort of in a bit of a startled state. And obviously that shows you the power of the subconscious mind too, because it's like I'm watching it and I'm enjoying it, but my subconscious mind, which is obviously designed to keep me alive, to keep me safe, it's evolved over millions of years in the human brain. It's obviously interpreting it that Ghost or Tommy's going to come and kill me, as opposed to, even though it's ridiculous, but it shows the power of the subconscious mind, because I do find myself that I'd sort of wake up in the middle of the night startled as though I heard a noise or something, but then there'd be nothing there. So that was something that I noticed. And I'll go through my own journal for last week, just sort of we'll go through each of the points and just how I sort of fill it in and how you sort of link the days together and sort of try and identify the trends. So can everyone see Notion now?
Yeah. Perfect.
So I started on Tuesday. So how am I feeling coming into the session? Any noteworthy events that may affect my mindset, either positively or negatively? Feeling very good, had a good night's sleep and woke up before my alarm, got me 10 pages and 15 minutes of meditation in pre-session. And it's incredible how much better this makes me feel. Really need to have the discipline to get the meditation in every day, because again, we all know meditation is very good for us, but it's incredibly easy to just skip it because you just want to get to the desk or whatever, but it's 15 minutes well spent on any given day. What is on my mind about yesterday and the day ahead? Happy with how I traded yesterday. Managed to stay out of the market when I knew conditions were not optimal, which to me is as much of a win as banking a winner. Again, that's just recognizing that when you're early in your journey, it takes a lot of time to get your head around the fact that trading, it's not like a traditional job where you get paid for action. You get paid just as much for sitting in your hands as you do for, it's like you might sit in your hands. I mean, Alex posted his results from last month in general chat there at the weekend. I think he had one big winner and then sort of one loss and 6 or 7 break evens. But again, it's like it was one winner that I think, if memory serves, the position played out in like an hour and 50 minutes. So he basically made the bulk of his money for an hour and 50 minutes of his work. Now, obviously, he was at the charts and he was prepared every day, but trading's different in that regard. So it's important to recognize the importance of sitting in your hands. Feeling very grounded coming into the session today, which is always nice. Like we all know, like when you have that feeling of calm where everything's just flowing, you've no stress in your body, and that's the optimal sort of place you want to be for trading. What strengths, qualities do I want to manifest in my trading today? These 3 are the same for me every day, just to sort of use it as like affirmations or whatever. Patience to wait for my edge to present, discipline to follow the criteria outlined in my plan, and the confidence to execute when my edge presents. I think that's pretty much good, profitable, consistent trading summarized in 3 points. What potential traps do I want to avoid? As always, I'm wary of letting fear prevent me from executing a setup, and greed from tricking me into forcing my will upon the market, which again, fear and greed, as I covered the last day, are the 2 main emotions you need to be aware of. So just, it's always good to sort of, it's easy with negative things. Humans, particularly in the modern age, have a tendency to just avoid them. They don't want to acknowledge them. They just want to ignore. So it's good to pre-market. It's good to just like sort of face up to them and recognize them. And, they're always going to be there, no matter how good a trader you are, no matter how much you're worth. They're always going to be there in varying degrees, and they're going to have to be managed. So intra-market, so I executed this trade for a loss. You can see I mitigated the entry model is clean as, mitigated the M15 POI, V-shape flip, more than happy with the setup. The M15 POI was pretty clean as well. See, larger internals bearish, and then we sort of had this bearish IBOS here, so everything was aligned, had this nice POI. It was the extreme unmitigated zone, it had inducement in front of it. So more than happy with the POI, more than happy with the M1 entry model. So how do I feel at the point of execution? Feeling okay, satisfied that the trade fits my plan, so happy to accept the risk. And that little phrase, accept the risk, is absolutely huge, because when you consciously, and it's very easy to sort of say, oh yeah, accept the risk. And it's like, you don't actually pay it heed. It was like, when you actually ask yourself, am I happy to take the loss here if this does not play out? And you say, yeah, I'm happy to accept the risk, and you actually consciously do it, the negative emotions after the fact dissipate so much. And that is an absolutely huge detail, that if you find yourself sort of going into a bit of a negative spiral after the loss, then you just have that little conversation with yourself, like, am I happy to accept this risk if that this is going to be a loss? Because we never know the sequence of our wins and losses, etc., etc. So what are the positive and negative confidence? Again, just quickly jotted it down. Entry model is clean, all the criteria are there, pro 4-hour and M15 trends, hadn't yet mitigated the prior demand range, so decent chance of getting trade to break even, which is another positive confidence. And then the negatives, deep in the discount of the 4-hour and M15 legs, looking at the 4-hour, it is likely that the reaction to supply may be failing, which would likely signal that the 4-hour pullback may be about to begin. But I try not to presume structure, and everything is bearish currently. So that's sort of that there. Yeah, it resulted in a loss, but again, more than happy with it, because they had sort of done this before, during the trade. I was happy to accept that. And then if passing on a potential entry, sorry, there was this setup on AU. You can see the entry model was just about as aggressive as they come. It's pretty much straight chalk. Very minor liquidation. I know some people in the community took this, but it was a bit too aggressive for me at the time. Yes, we got a bit of a push down, but then price sort of ranged around. Personally, I would have been expecting maybe the high to get swept and then sort of get a cleaner entry model. And then you can see, yeah, again, it was the M15 POI at the extreme, nested in the 4-hour, is in the premium of the M15 leg. So yeah, the M15 POI had merits, but just in the moment, you can see, how do I feel? Potential entry in AU, happy to pass, way too aggressive in my opinion, played out in this occasion, but imagine over a large sample size, I'd imagine you take a lot of hits. And then the positives, M15 supply at the extreme of the range, no inducement in front of the POI. Entry model is way too aggressive, essentially just straight chalk against a lot of bullish momentum. Wanted to see a clear liquidations, just noting all this stuff down. And I can't forget that we were trading against the daily demand mitigation. So not a place to be ultra aggressive, even though sales are pro M15 trend, as when you've mitigated the daily demand, there's always a good chance that you're going to get a very decent pullback, which would obviously see the M15 switch bullish. And then the general market conditions are clean, M15 swinging internal, both bearish, having mitigated 4-hour supply. Path of least resistance is definitely the downside. So I obviously had a high conviction in looking for sales. And then sort of that was my thinking in the moment. And then you come to the post market. Out of 10, how would I rate my trading performance today? 6 out of 10. What did I do? Well, I did not let the loss that I took at the start of the session affect me. I accepted the risk beforehand and was quickly able to quiet the negative emotions following the loss and refocus on the current price action rather than allowing myself to get distracted. Something I could have done better today. And again, it's an opportunity as well. Like, if you think you made a slight technical mistake, this is maybe where you can say, identify things that you need to work on in regards to that. In this case, I was looking at the AU trade, and then obviously in hindsight, it played out. It absolutely tanked the week M15 low was run as it played out. So maybe being the M15 extreme POI, it's probably the area to be aggressive with those aggressive entry models. But you can see the momentum coming in, just a very minor chalk. It's one of those, it's very marginal, but then it's something that maybe I need to explore in my sort of data, maybe in my testing or whatever, to establish whether do I just want to take every chalk in the M15 extreme, is that profitable? And then, again, if I take the first chalk and maybe the high does get swept and then the entry model sets up again, am I happy to take that? So these are the sort of things. So something I could have done better today, maybe should have been more aggressive from the M15 extreme and AU. Maybe it is always worthwhile being aggressive. Yeah, there's something I need to crystallize in my plan. It is also worthwhile trading against the M15 range mitigation when trading from the extreme, as it is the last area that has to hold if the trend is to continue, which would obviously see the internal ranges fail. So it's just sort of, again, in my trading, knowing that just in my trading plan, there's maybe a bit of a vagary that I need to crystallize into a solid plan so that I'm not hemming and hawing and, passed on at the moment, but afterwards I can justify it. It's like, that's not the situation you want to be in. It's like, you want to be like Tomas. You want to be able to say 110%, yes, that fit my plan. No, it didn't, which is something I'm sort of working towards myself. But again, you can do that in the post-market analysis. something I learned about myself. I've definitely improved my emotions trying to taking losses, which is a very important development that I need to give myself credit for. Most traders never master their emotions, which is why the majority fail. An action I can take to improve my trading going forward is making morning meditation a non-negotiable. My performance is noticeably better. And again, I know that because I noted in the morning feeling very good, and that after doing my 15 minutes meditation. So sort of it's like you're basically connecting the dots between pre, intra, and post session, which is ultimately the goal. And so I'll go through.
Can I just ask one question, David? I'm very
Yeah,
curious.
go on out, Thomas.
First, like the work is incredible, well done. But the question I always ask is, usually around how much time do you take per day to complete all these folders, that Monday, Tuesday, Wednesday, Thursday, etc. And if you review them in the end of each day, or you review them in the end of each week?
It's about 10 minutes pre. Now, to be honest, I sort of have had my own way of doing this before I designed this sort of template, so I would sort of stick to it. But just on account of sort of creating this template and knowing that this is coming up, I sort of did this last week. But again, probably took me 10 minutes pre, whatever during. Just like if a setup comes, just scribble it down as quickly as possible, and then probably the same post. So you're probably looking at 10 pre, 10 post, and then maybe a few 5-10 minutes maybe intersession, and then review it. I would generally try and review it at the weekend, but it's like when I filled in Tuesday and then I go to Wednesday, it's like I do sort of look back at Tuesday and sort of see like, right, what happened yesterday, because it is easy to forget, so you can say, oh yeah, I missed that trade and then that sort of it leads into like the next day where you're basically saying, is there anything on my mind from the day before, and then you sort of look, it's like, oh yeah, I took that loss. Because again, it's like you might have your conscious mind might have forgotten that you took a loss yesterday, or that you missed a winner, or that you banked 10, or your conscious mind might have forgotten that, but it might still be weighing on your subconscious. So it is good to sort of just refamiliarize yourself with what actually happened yesterday, which is why I think this template's very handy for just actually being able to quickly glance at it, what trades did I take, what trades didn't I take, sort of what was going on.
I was actually thinking that something that can also be very beneficial is, instead of just doing like advanced review ASR of the trades we took in the end of each month, quarter, etc., we can always like try to link between a period of drawdown. Imagine that you have a drawdown of 3 trades, which is perfectly normal. It doesn't mean you are making any mistake, but I think it can be valuable to, in the end of the month, you can see, okay, Monday, Tuesday, the second week of October, I took two losses in a row. Let me see which day it represents, and let me go through the journal that I wrote back then, and maybe try to create some, discover some patterns within your own behavior. I think that can be also very, very good to do. Just and feedback. I think it's incredible, the work. So
yeah, no, that's exactly it, because that's the whole point. Is like, it's easy to look at your, you say, all right, I made whatever 20 or that week, or I lost 5 or that week, and you go back and you look at the trades, and it's like when you're looking at the trades, the emotion is dissipated, and it's like if it was a loss, it's easy to look and say, oh yeah, that trade was shit because this, but you actually ignore the positives. Whereas when you actually have the data of what you were thinking in the moment, you can actually basically cross-reference it, and then that is how you identify the negative trends. It's like, the week I lost 5 or I was just back from holidays. So it's like, maybe rather than trying to get straight back into it and, jumping straight back into trade, and you realize, right now, when I'm back from holidays, I need to give myself, 2 or 3 days to reacclimatize. I was just noticing the little trends I got there, or, if you had a bad night's sleep, maybe don't trade, or,
I found that myself when I have a bad night of sleep, or imagine that you have a family birthday, something like that, and it's in the middle of the week, and you usually go to bed a little bit later. When I come back the next day, I majority of the morning, I like procrastinate a lot. I just can't focus. It's just like 10-20 minutes, and then I'll look to my phone or YouTube or just do other stuff. So I know that in the next day, I probably will just mark the charts, but will not be actually trading.
Yeah, but see, having that awareness is absolutely huge, because it's like, there is this thing, and again, fear of missing out or greed or whatever can come into it, is that, oh no, I'm back and I want to make money, I want to get involved. But it's like, but if you're just not, if it's not optimal for you to do so, like if you're not in the place to do it, it's like maybe it is a better decision for you to say, right, I'm not going to make any money today, but I'm not going to lose any money, and I'm going to come back in tomorrow or in 2 days' time completely refreshed. And it's like noticing these trends. It's like, because it's something that I really noticed, that like that weekend I was over in London. It's like the next week was a write-off. It's like it was literally just a complete write-off. It's like I was at the screen, I was up, I was doing the markups and all on Monday morning, but it wasn't until I had basically the next weekend off and just chilled that I came back the next week ready to perform. And it's like, again, it's understanding that, because being aware that, when you're in that situation, maybe you do want to trade, but maybe you just want to be hyper aware that, right, I only want to stick to the absolute supreme high probability trades here, because, it's very easy to get caught up in, trying to catch a few chalks in a suboptimal M15 POI, whereas maybe you just want to say, no, I'm waiting on that one POI, I will take a trade from that, rather than getting caught up in the emotions of the moment. But it's like that, it's invaluable just knowing this. And it's like, trading, it's as much about mastering yourself as it is about mastering the charts. Like,
exactly. Well,
but I go through Wednesday and Thursday as well, because there was a couple of those sort of mistrades and some interesting sort of data in it that hopefully should help people. How am I feeling? Feeling good, solid night's sleep, getting to bed at a consistent time has worked wonders for my sleep quality. Again, I'm in bed at 9 o'clock most nights now, and I can easily sort of get up at 5, which has been absolutely massive. Because whenever we used to trade the old sort of strategy in Photon, I used to sort of set the alarm for 6. I would sort of roll over in bed, check the charts on the phone, and then sort of roll over for another hour if there was nothing doing. But it's not exactly something that's consistent with profitable trading. Happy with how I traded yesterday, anticipating a bullish pullback following the sell-off in AU and AU, so I'm fully focused on being able to take advantage of any setups that present, as the first phases of the pullback are very high probability according to my data. So again, it's like I've recognized, right, there's been the huge sell-off in the dollar pairs. It's like, right, pullback, there is going to be a pullback. Now again, you don't want to be trying to force this, but whenever you get the signs of the pullback, it's like you have to know there's very high probability. And I should have maybe been more aware of this, because I passed on a trade, and it was a marginal trade. It's one of those you can argue with it. I know a lot of people talk it, but maybe I should have been a bit more aggressive and a kind of sort of being anticipating, the high probability pullback. What strengths, qualities do I want to manifest my trading today? Again, patience to wait for my edge to present, discipline to follow the criteria outlined in my plan, and confidence to execute. What potential traps? Avoiding the negative spiral if I take a loss during the session. I'm anticipating a high probability phase of the market that I want to take advantage of, so there's no room for fear stopping me involved. Equally, I need to counterbalance this and make sure I'm not forcing subpar positions because greed is kicked in. Stay balanced. So again, that's just me like recognizing my own weaknesses, rather than just trying to avoid them or bottle them up or just ignore them. It's like you just acknowledge them. And it's like when you acknowledge something, it's a lot less scary. So intra-market, didn't take a trade, so there's nothing there. And then this was the trade I passed on. I know a lot of people took it. In hindsight, it's very clean. What sort of put me off it was on the M1, this low was weak because you can see it failed to take out this high. So that sort of put me off. The POI, the entry model then was pretty clean. That's not even really a valid M1 demand because it didn't achieve on them. But you can see you got the liquidation, chalk, or V shape, and then pull back in the M1. So it's definitely valid, the entry model. And then on the M15, what put me off was price failed to close above the high. You can see it was basically a liquidity sweep. So it's from this demand that the buy is from. So again, not a fan of trading from a weak leg, but this low was strong because it caused the IBOS there. So that's one of these. Maybe I should have ignored the fact that it didn't close above. It spiked through the 4-hour demand. So in the moment I passed on it, but obviously it was a pretty expensive mistake. Bullish M50. So how do I feel at the point of execution? Feeling more than a degree of uncertainty with position. I just remember him in hand that I sort of wanted to get involved, but price failed to close above the high. The low was weak in the M1, so it was like uncertainty. When you're him in hand in position, in a lot of cases, that's a sign not to take it because the absolute best trades should hit you in the face. And as I said there, usually when I feel uncertainty, err on the side of caution is usually the best trade to hit me in the face, such as the level of clarity that I experience. So passed on it again, maybe it was right or wrong, it's up to interpretation, but obviously played out in this case. What are the positives? Bullish M15 IBOS signaling pullback could be beginning following the break of structure. Demand that caused the boss was respected. 4-hour supply failed. Price failed to close above the internal low, internal high, so the low was potentially weak. On the M1, I could see that we were trading from weak M1 low, not a very convincing level to be trading from, particularly given how bearish price is overall. Entry model is pretty clean. And obviously general market conditions, bullish M15 IBOS, which is a decent signal that the pullback that I've been anticipating could be commencing. So I'm eager to get involved. However, I am also wary of forcing things. So it's like, you have to balance that. Yes, I want to get involved. No, I don't want to be an idiot. And then post-market, obviously missed out on a huge winner. How would I rate my trading performance today? Give myself a 5 in this day. What did I do well today? I passed in a margin setup and a kind of price failing close above the high. Happy with the thought process in the moment, because as I said, I was hemming and hawing, and usually that's a sign to sit in the sidelines. Something that could have been done better today, maybe should have been more aggressive trading from the week low after the 4-hour supply failed. So again, maybe that's something I need to factor into my thinking going forward. When when the 4-hour zone had failed, it's obviously a lot more likely that the complex pullback is going to play out. Something I learned about myself in the markets today, it was this basically piece of price action here. You can see how slow and corrective it was until it finally picked up steam and then rocketed to the upside. So quite often price action can be very corrective in the early stages of a higher time frame pullback. This is likely because there's still a significant battle between supply and demand occurring, and one side is yet to overpower the other. So again, that's something that maybe I need to be aware of, because when price is sort of moving away from the entry very correctively, it's very easy to sort of do something stupid and break your management plan. But you just have to have faith that your edge is going to play out. And I need to be prepared for that. Trust the structure. That was sort of an action I can take to improve my trading going forward. And then Thursday, I'll go through as well, just on I want to sort of show you how I was aware of how missing the winner on Wednesday could have affected me on Thursday. And then Thursday, how am I feeling coming into session? Any noteworthy events recently that may affect my mindset, either positively or negatively? Relatively poor sleep last night. Woke up a few times, but still managed to get up at 5 a.m. without much trouble. Watched Power last night before going to bed, and the violence may have affected my sleep, which again was a bit of a surprise, but it's definitely something that I have to keep aware on. Maybe I need to watch some like Happy Days or something before I go to bed. We'll have to keep an eye on this going forward to see if there's a recurring issue, because again, obviously, if you want to be in your optimal performance, like you don't want to be waking up multiple times in the middle of the night thinking somebody's coming to shoot you. What is on my mind about yesterday and the day ahead? Slightly annoyed about missing the winner during New York yesterday. It was one of those marginal trades that is easy to make the case for both taking and avoiding. Overall, it was a weak leg in the M15, so happy to have sat it out, as I don't like trading from weak legs. So sort of have to recognize the thought process in the moment was perhaps correct. What strengths, qualities? Just the usual: patience, discipline, and confidence. What potential traps do I want to avoid? Having passed in the winner yesterday, I need to be wary of greed seeping into my subconscious thinking and leading me to force a trade that isn't quite up to scratch. So again, just acknowledging that because I missed out on the money on the profit yesterday, that basically my subconscious will want to make up for that and lead me to sort of take subpar trades. If executing a trade, this was actually quite interesting because I took a loss and then I wasn't tagged in the potential winner after it. How do I feel at the point of execution? Am I relaxed? Any negative emotions? Slight feeling of FOMO. However, I'm not sure that it is a negative in this case, as everything is aligned bullish currently, and I have a clear read on price. These are exactly the scenarios where I want to be aggressive, so a slight amount of FOMO may be beneficial in this case as a sign that I am focused and ready to execute when price is in a high probability phase. So again, FOMO can work for and against you. In this case, I remember I was sitting at the desk and I was absolutely laser focused, which during New York, sometimes I have a bad habit of sort of being semi-present. I'll sort of have my alerts set, but I won't really be watching price that closely. But this day I was sitting down and ready to go. So what are the positives and negatives? You can see in the M15, we've mitigated the EQ of the leg, internal switch bullish, and then we had another leg up. We mitigated this demand in the process, had this range, and basically would pull back into this demand. So this is where the two trades were. So at this point, everything was aligned. We mitigated the EQ of the leg, so very likely the pullback is complete. And I was basically super confident the week high was going to be run. So I was very eager to get involved in any buys from this POI. And you can see first trade was super aggressive entry model. It was basically just the straight chalk. There was these M1 equal lows behind as well, which wasn't ideal. But you know, had the liquidation, swap liquidity there as well, had the chalk. But as I said, I had a massive conviction that was going to play out. So I was happy to be aggressive. And then there was the second entry down here, which was obviously the super clean one because pretty much ticks every box, mitigated the M1 extreme, had the flip, V-shape, chalk, but then obviously no tag. So again, a bit annoying when you have the read on price and you have a high degree of confidence that you know where price is going to go, and then basically you take the loss and miss that and don't get tagged in the winner. Again, can be frustrating. But yeah, just the positives, M15 swing and aligned entry model as aggressive as they come. That's fair enough. The second trade is the most interesting one because quite often after taking a loss, fear can kick in, and it's certainly happened to me a lot where basically I basically lose. I'm so consumed by the loss and the negative emotions that I basically lose perspective of where price is sitting on the higher time frames. But in this case, we're still in the high probability POI. Everything was still aligned. We mitigated the M1 extreme, which is even better, and then the M1 entry model was absolutely perfect. And yeah, how do I feel at the point of execution? Confident in my analysis, zero hesitation after taking the loss. Feels good to have no fear. And then basically the positives and negatives are the same. Everything was aligned pretty much. And then yeah, there's a couple of potential entries that I passed on. This was the one I know Matt took. You can see it's basically the flip. It's from this supply here. I passed on it. Was happy to pass on it. Internal is clearly bearish, but we've mitigated the EQ of the bullish leg, meaning the pullback could be complete. Yes, there is a possibility of continuing lower to mitigate one of the POIs below, but in my plan it states that I can only play the counter trend internal pullback if trading from the premium or discount. And once the EQ is reached, is no longer valid. So quite simply, potential entry made sense relative to the bearish order flow, but it didn't meet my plan. So again, super happy to pass on it. But no, it's good to just like note this stuff down and sort of reinforce it. That you know, it's perfectly okay that, you know, a trade that I take or Matt takes might not fit your plan, and that's perfectly fine. And then yeah, again here there was this potential buy from this POI. It was at the EQ. So yeah, it's valid. Wasn't the best POI, didn't sweep liquidity. It was just sort of messy price action, but it was at the EQ. You can see a lot of momentum come in that basically caused the bullish boss, which is obviously a massive positive confidence. You can see we come into POI, had the flip, had the chalk V shape. So again, that's a valid place to enter, but the M15 internal was bearish. We've mitigated this M15 supply. So personally, it's not in my plan to leave a trade against that and leave a limit order there, which again fits your plan great, but it is more aggressive. You're going to take a lot of losses, particularly as the POI wasn't the best and those unmitigated POIs below. So maybe had it been the extreme, had it been one of these POIs down here, I probably would have been more willing to trade against the M15 as you're sort of betting that the swing trend is going to continue at that point. Very happy to pass on this, so I'm confident that it's pretty low probability to be trading directly against M15 supply in this case, particularly as the M15 supply price coming off wasn't the best. Yeah, and that's pretty much just yeah, just I was happy to pass on it. So again, I know some people call it that. Fair play to them if it fits their plan, but it's too aggressive for me, and just sort of being aware of that is massive, because it's very easy, particularly in the early stages, to see a trade play out and think, oh damn, I missed that. But it's like you have to sort of know what fits your plan and what doesn't. If you're passing on something, why did you pass on it? Which again is where this you know, if you didn't have this here noted down, sort of why you're passing on it in the moment, you can look back after seeing it playing out and somebody banking 26 or whatever, and then, you know, you can say, oh, I should have taken that. But it's like, but in the moment, it didn't make sense to you. And that's the most important thing, because like all you have at the end of the day is your own plan, your own emotions. How am I seeing general market conditions? Price is completely aligned. M15 swinging internal bullish. high probability the M15 week high is going to be run, which obviously was governing my thinking with how aggressive I wanted to be.
Can I just add one thing, David?
Yeah, go on ahead, Tomas.
I was just saying about this particular setup. It's important for you guys, if you are new, to not do the markup and start marking this as a possible entry if it's not according to your trading plan, because I'm sure David, when saw this setup and was doing his markup, he did not put a setup and said that it's a possible 20R or 100R, because we can actually see a lot of people in SMC that on a markup can say like 100R available, calls -2. So that's not what you want. So yeah, basically when you're doing your markup, make sure to mark actually the trades that fit your plan and not hindsight trades that just play out, because otherwise you are being too flexible on your rules, and you are flexible in your rules. You are allowing yourself to a lot of not just discretion, but you are adding a lot of possible variables come into play. And we want this to be simple, and the process of thinking should be as less as possible. It's black and white. And when you start putting too much variables to fit every single position, we lost the clarity in the first place. So that's a point I want to make it clear for you.
Yeah, that's exactly it. And that's why we preach like being as mechanical as possible, even with like management, maybe being most mechanical management, where you basically take your fixed 5 or 10 hour, because, and you know, also remove risk in the same way with as partials, because again, it's easy to look at these trades and say, oh, it was obvious that week high was going to be run. I should have held that and I should have banked 40 or. But it's like, realistically, are you like, like personally, if I'm running 15 or like I'm literally my hands twitching over the mouse, just dying to closes. Like I just don't have the stomach, but I just don't have the stomach to hold full volume for that there, because like what, oh yeah, it's running 30 or, and then because like you never know, like anything can happen in the market at any time. Like all it takes is one fella to step in a bank or a hedge fund and hit sell, and all of a sudden that's coming smashing back to the downside. So it's like, just that's why it's important to be consistent. And because like imagine like running 30 or and then taking a break even, like that would make me think my computer would be going flying out through the window if that happened. But you know, that's why we preach like keeping things as mechanical as possible, so that you can clearly see, like in this case, there's no way, because the M15 order flow was bearish, there was no way I was trading against that M15 supply there. And it's like, I know that, and that's why even though it played out and I could have banked 30 or whatever, it's like, I know that over a large sample size, it doesn't serve me in either results or, more importantly, my mindset, because I prefer to try and keep my strike rate a bit higher. But yeah, this is another one where it's like on this day I basically ended up -1, and then obviously the 1 no tag on the big winner. But how did I rate my trading performance day? 8 out of 10, even though I made no profit. It's like, it was still a great day. Why? Because I passed in a valid setup that didn't fit my plan, 0 greed FOMO, which is obviously a massive win when you don't let those two take over you. Executed a trade with 0 hesitation immediately following a loss. Happy to not let the fear get the better of me, even though it was a no tag. So, you know, even on the days that you don't bank profit, it's like they can still make progress. You can still have, you know, done well, because this is the classic, you know, being process rather than outcome orientated. You know, a good day is any day you follow your plan. It's not you know, it doesn't matter if you bank 20 or on that day. But something I could have done better today. Very happy with my performance. So I will try to reinforce the positives today. Again, you don't also have to nitpick and find something sort of wrong with your trading. It's good to sort of give yourself a pat on the back sometimes, say job well done. Something I learned about myself: I am in complete control of my emotions if I choose to be. An action I can take to improve my trading going forward is need to make sure I am fully focused coming in New York. There have been a lot of opportunities during the session recently, and I have a tendency to be operating in autopilot compared to how I operate during London, which again, what I said, I have a tendency, I'll trade in New York, I'll set my alerts, but I'll be pretty loosely focused. I'll not be at the desk focused. And recently, a lot of the winners have been during New York. So it's quite important to sort of, you know, you just want to be in the zone. Like, it's like, and then that's something that I need to decide as well. It's like, right, if I'm going to half-ass New York, then I just need to not trade it, because these are all having this data, understanding this. This is where you sort of realize decisions that need to be made. You know, do you want to commit to New York? Do you want to bid in New York? You know, this is where you can sort of figure these things out whenever it becomes a recurring theme. So that's pretty much all I wanted to cover there. So I'll go through some of the questions here. Can you show a successful trade? I don't actually have one to hand. Basically, because last week was a pretty frustrating one. But if you go through any of the markups in the Photon markups channel, Matt posted a nice entry model this morning that he banked 10 or on. So it's in the Photon markups channel. So that should give you an idea of what we're looking for. How do you avoid trading when you've been waiting for a setup for a long time and start getting FOMO when the markets are moving and you're not in? I find this to be a major problem when I'm on a funded evaluation. I start to get agitated and my mindset gets thrown off. Well, that's the problem. It's like, here was the absolute classic example. And I remember this playing out, and like, that's as clean an entry model as you can see, but there was just no tag. And like, I remember seeing price around here and I was literally, I had that feeling, had the tightness in my chest, knew I was going to do something stupid. And I think, yeah, it was around 2:15. So usually trade till 3 with New York, but I just said, no, let's just go. So I went to the gym and basically just got away, because that's where it's completely understandable. Like, I knew, like, you see my journal for the whole day, I knew price was in a high probability phase. I waited until 2 p.m. basically for the setup, and then basically no tag. And it's infuriating, but it happens. And the best thing to do is just get away from the computer, because that's when you're going to do something stupid. And it's like, on the rare, and like, if you start trying to jump in M1 continuations and all up here, it's like, it might work out. And to be honest, probably the worst thing that can happen is that it works out, because it's going to positively reinforce that whenever that happens is a good idea. But look, you just have to accept, like, I know my edge is down here with these entry models. My edge isn't with M1 continuations up here. So when it's gone, you just have to accept it. And look, it's annoying, it's infuriating, but my advice is just get away from the computer. And
just about one thing, David, on how can I pronounce the name? Mike Andrew, where he said about waiting for too much, about too long for the setup. One thing that I also just want to add is, in my opinion, that's some kind of scarcity mindset, which means that you personally don't believe the amount of opportunity you have in the entire month or quarter. So, and about your, in my opinion, also how you perceive like trading in general. Maybe you believe that trading is, you should take a trade every single week to be a trader, or a trade every single day. In this kind of scarcity mindset, which means that you don't believe the number of opportunities you have, I think it comes down, it ends up as you forcing trades and not following your rules. So I appreciate that in the beginning is very difficult to overcome, but as you go along and you stay and you keep markups and you test and you see the strategy playing out, you can see that usually the high probability setups don't tend to appear even every single week. Sometimes there are weeks that I don't place trades. I personally don't place trade. This month I just took one trade, but I was 2 weeks without placing a trade. So to answer your question, in my opinion, it comes down to keep keep showing up with the markups and the testing, because that will give you the confidence to avoid this scarcity mindset. And yeah, I'm not sure if David, if you agree with me, but just something that I thought interesting to share.
yeah, no, that's absolutely spot on, Tomas. And it's like, you know yourself, with SMC, pretty much every single move in the market, you can justify an entry. It's like, you can look back and you can say, oh yeah, there was those M15 wicks that it reacted to, and oh yeah, there was an M1 shock there, and that played out. And it's like, you can nearly always do that with every move, but it's like, it doesn't mean that they're trades you should be taking. And this is where it's like, you need to have that mechanical edge where you need to be able to say with a fair degree of certainty, this fits my plan or this doesn't fit my plan, because that stops that sort of, it can stop a lot of the greed and FOMO. And like, you know, as you say, you're waiting for a trade. It's like,
yeah,
just wait. It's like, just, you know, nobody's forcing you to do on. And that's another massive realization I had, is that, you know, it's like, nobody's forcing you to do on trading. It's like, you are in full control. It's the arena of unlimited expression. You are in full control of your actions. You don't have to do on. You just wait for the market to present your edge, and then you execute. So it's like, if the market isn't presenting, then there's no trade. But no, it's absolutely spot on, because it's very easy to sort of get caught up in all these moves that play out. And it's like, you know, they're valid,
yeah,
but they're not high probability trades.
I do understand, like in the beginning, and it's on you allow we always have this kind of emotions. What I think it's important is, and you already did it very well, David, is when you notice these kind of emotions that are creeping in, instead of going through, like, you receive the stimulus, let's say. So instead of going straight away and and make an emotion decision based on that stimulus, which is not seeing a trade, for example, for a long time, instead of having that emotional response, being aware that you are receiving that information from your subconscious, but instead you deliver to the conscious side of your brain, right? The rational side of your brain, and you know that that's perfectly normal not having a trade each week, because I know through testing that taking, like Alex, for example, last month took one trade and banked 20%. So that comes down, in my opinion, to all we both talk about. And yeah, it's normal to have those stimulus, but just be aware that when you have, make sure you don't act upon your emotions, and instead act with your rational side of your brain, if that makes sense. What do you think, David?
Yeah, no, absolutely perfect, Thomas. Yeah, I couldn't agree more, because it's like, if you feel that, if you're at the charts and it's like you feel, yeah, you haven't taken a trade for a while and you feel that you're likely to force something, it's like, just walk away. Like, say, analyze the charts, say, right, where are the high probability POIs, set your alerts on them and walk away, go do something else. And then if the alert goes off, come back to the screen. Because where it's very easy to get caught out when you're sort of in that sort of mindset is that you'll be watching price and then you'll see maybe an M15 shock in the middle of nowhere and you'll think, oh, price is going to the upside now, and you'll get in that demand, and then you'll take a stupid loss. And the only reason you took it is because you're at the screen and you saw it happen at the time. It's like, yes, it was an M15 shock, yes, it gave us valid M15 demand, but it was a low probability area, so you just want to leave it. Which is why, if you're feeling like that, just identify the high probability areas that you really want to trade from and just set the alerts on them, and then go and read a book or sit outside or do whatever you want. Just put yourself out of harm's way and don't be sitting at the keyboard.
Yeah.
So self-awareness is a powerful protection when approaching the market. Definitely. I couldn't agree more, man. It's incredible whenever it's absolutely essential if you want to be a trader. Like, it's like, if you can't control yourself, it's like, the markets, you can't control the markets. The markets can do anything it wants at any given time. So all you can do is control yourself. And if you're not even aware of what your own habits and beliefs, etc., are, it's like you haven't a hope of controlling yourself. So to me, it's maybe the most important thing. So any other questions or anything, guys, or we'll wrap it up there. No, nothing. So we'll call it a day then. Thanks very much for your time as always, guys. I really enjoyed this. Hopefully it took something from my journal and have maybe a bit of a better understanding of how to use it yourselves going forward. And maybe it took some value as well out of my sort of little experiences that I had of those trades and missed trades, etc., and how I sort of approach the next day after them, etc. So hopefully it's took some value from it.
Yeah, thank you very much, David, and thank you guys as well.
Thanks for your help as always, Tomas. So we'll call it a day there, guys. If you've any questions or anything, just drop us a message in the Discord or whatever. All right.
Bye, guys.
Thanks, guys. Bye.